So in the last 3 months alone, massive merchant conglomerates basically filed lawsuits over transaction fees, right? And it forced Visa to lock away $625 million into this legal escrow account.
Right, which is just a massive liability.
It's a staggering liability. But then in that exact same quarter, Visa processed over 66 billion individual transactions and, just casually authorized a $20 billion stock buyback program.
Yeah,
right?
Like it was nothing.
Right. So today, we're looking at a financial juggernaut that is quite literally out-earning its own massive legal vulnerabilities. Welcome to our latest deep dive.
Glad to be here.
If you are joining us right now, you are a fellow curious learner, and we are absolutely thrilled to bring you into this conversation. Our topic today is Visa's fiscal second quarter 2026 financial results, which hit the wires on April 28, 2026.
Yep, fresh off the press.
Exactly. And we are analyzing a pretty dense stack of sources today. We've got Visa's official Q2 2026 earnings release, their investor presentation, and their highly detailed Form 10Q SEC filing.
Yeah, it is a really dense set of disclosures. But, if you know where to look, it reads less like a boring financial report and more like a real-time heat map of global commerce.
Heat map.
Yeah.
I like that. Well, our mission for this deep dive is to cut through all that corporate jargon and discover what Visa's $11.2 billion quarter actually reveals.
Right.
We're looking at the health of the global consumer, the aggressive evolution of digital commerce, and of course, the hidden structural vulnerabilities of the global payments industry.
And to understand the nuances of where they're heading, we really first have to ground ourselves in the sheer staggering volume of what they are executing right now.
Right.
Because you mentioned the $11.2 billion in net revenue for the quarter. That actually represents a 17% nominal increase.
Wow.
Yeah, which is Visa's highest growth rate since 2022.
Okay, let's unpack this. Because the numbers here require a bit of mental recalibration, I think.
Oh, absolutely.
They pulled in GAAP net income of $6.0 billion. That's up 32%, with earnings per share jumping 36%. But the metric that truly anchors this entire discussion, at least for me, is $66.1 billion.
The transaction volume.
Yes, $66.1 billion processed transactions in just 3 months. That's a 9% increase over the same period last year.
It's almost hard to visualize.
It really is. Think of Visa like the ultimate toll booth on the highway of global commerce. If your toll booth is processing 66 billion cars in a single quarter, the highway is packed.
That's a great analogy. And, that volume fundamentally challenges a lot of the mainstream macroeconomic narratives we've been hearing lately regarding a global economic slowdown.
Right. The whole recession is coming narrative.
Exactly. Because you simply don't see 66 billion discretionary and non-discretionary swipes in a 90-day window if the consumer base is pulling back entirely.
Yeah, that makes sense.
And CEO Ryan McInerney specifically pointed to this in the earnings release, characterizing consumer spending as highly resilient.
See, I have to push back on that resilience narrative just a little bit.
Oh, how so?
Well, when you see a 17% revenue jump, the immediate skeptical reaction is that it's, an inflation mirage.
Ah, right, because everything costs more.
Exactly. Prices go up globally, so the fixed percentage Visa takes off the top naturally translates to more nominal dollars. So are we sure people are actually buying more things, or is everything just more expensive?
Well, it is a totally valid skepticism, but the constant dollar metrics tell a different story.
Okay.
Because this isn't just an illusion created by inflation or currency fluctuations. If we strip away all the foreign exchange noise, non-GAAP earnings per share was actually up 20%.
Oh, wow.
And revenue grew 16% on a constant dollar basis. So that proves genuine volume growth. People aren't just spending more nominal dollars on identical baskets of goods. The actual frequency of transacting is accelerating.
Okay, that's wild. And a massive chunk of that acceleration is happening across borders, right?
Yes, exactly.
Total cross-border volume was up 12%. And the sources make a point to specify that cross-border volume, excluding intra-Europe, was up 11%.
Yep.
Let's talk about the mechanics of why that specific exclusion matters. Because they highlight it for a reason.
They do, and it really comes down to regulatory caps and margin profiles.
Okay.
So intra-Europe transactions, meaning a transaction between, say, a merchant in Germany and a cardholder in France, those are subject to strict interchange fee caps mandated by European regulators.
Right. The EU is pretty strict about that.
Exactly. So they simply aren't as profitable. But when someone from the US travels to Japan or someone in Brazil buys software from a UK developer, that completely falls outside those European caps.
So Visa captures a much higher margin on those non-European international transactions.
Precisely. They collect what's known as international transaction revenue. So when we see an 11% jump in that specific, highly profitable category, it acts as a massive multiplier for their bottom line. Yeah, it tells us that international travel and global e-commerce money movement are not just recovering, they are aggressively expanding.
So the core toll booth is obviously booming. But the narrative starts to shift when you look at how Visa makes money around those transactions.
Right, the secondary stuff.
Yeah, because every one of those 66 billion transactions leaves a digital footprint. And Visa has clearly realized that the data generated by the toll booth is becoming just as valuable as the toll fee itself. Let's look at their secondary revenue streams.
Yeah, this is where we see the transition from a company that merely moves money to a company that monetizes the intelligence behind the movement.
Right, because other revenue, which honestly is such a deceptively boring line item,
It really is.
it surged 41% to $1.3 billion.
Incredible.
And within that, value-added services revenue hit $3.3 billion. That's a 29% increase.
Which is huge for a company this size.
Absolutely. The sources break this down into issuing solutions, advisory, and acceptance solutions. And get this, client consulting engagements alone rose 32%.
Yeah, 32%.
Are they quietly becoming a global consulting firm instead of just a payment network?
Well, what's fascinating here is that they absolutely are, and it is a brilliant structural pivot.
Really?
Oh, yeah. I mean, a 32% increase in consulting engagements shows that Visa is no longer content being a passive utility pipe. Think about the unparalleled visibility they have.
They see everything.
Exactly. They know the velocity of consumer spending, regional shifts in purchasing behavior, and fraud vectors in real time across billions of data points.
Right.
So they are taking that anonymized intelligence, packaging it with their risk modeling and loyalty program optimization strategies, and basically selling it back to the very banks and merchants who use their network.
Wow. So they're essentially double dipping, but in a way that provides actual value.
Exactly.
Like they charge you to move the money, and then they charge you again for the analytics report on how the money moved.
And the beauty of that consulting model is the margin.
Because it's practically free to produce.
Exactly. The core infrastructure, like the literal fiber optic cables and data centers that gather this intelligence, is already built, maintained, and paid for by the transaction business.
Right.
So selling the resulting data as an advisory service is practically pure profit.
That is genius. But, while they are aggressively extending these high-margin services, their operating expenses show a really bizarre divergence.
Yeah, the expense report is a bit weird this quarter.
Total GAAP operating expenses actually dropped 4% overall. We'll get into the legal reasons for that drop in a moment.
Sure.
But inside that overall decrease, marketing expenses jumped a massive 44%,
Yeah.
hitting $545 million for the quarter. I mean, what justifies spending over $500 million on marketing in just 3 months for a brand that essentially already has universal global recognition?
Well, the 10Q filing directly ties this surge to two massive upcoming global sponsorships.
Oh, right.
Yeah, the FIFA World Cup 2026 and the Olympic and Paralympic Winter Games Milano Cortina 2026.
Okay, sure, sponsoring those events isn't cheap, but I mean, $500 million in a single quarter still feels steep for mere billboard space and television spots.
Right, but that's the thing, because it isn't just about brand visibility. Visa uses these mega events as localized laboratories to force behavioral shifts in consumer payments.
Laboratories, what do you mean?
Well, when they sponsor the Olympics, they don't just put their logo on the stadium. They essentially rewire the payment infrastructure of the entire host city.
Oh, wow.
Yeah, they deploy the absolute bleeding edge of their technology, whether that's ubiquitous tap-to-pay terminals, specialized wearable payment rings, or biometric authentication like palm scanning at the concession stands.
So they use the influx of tourists to beta test the future.
Exactly, and they create an environment where the most frictionless way to exist in that host city for a month is to use Visa's latest tech.
That makes total sense.
The goal is that once the games end, that payment behavior has become a sticky habit for the millions of people who attended, and the upgraded merchant infrastructure remains permanently in place.
See, here's where it gets really interesting. Because They aren't just building new tech internally, right? They're aggressively buying up the infrastructure of tomorrow.
Oh, absolutely.
Let's shift to their February 2026 acquisition in Argentina. Visa acquired Prisma Medios de Pago and NuPay for $1.5 billion in cash.
Right, which is a very targeted deployment of capital in one of the most complex financial markets in the Americas.
And the filings note this acquisition brings real-time payments, the Benelco ATM network, and a bill payment platform called Pago Mis Cuentas under the Visa umbrella.
Yep.
But the strategic intent goes way beyond just owning an ATM network in Latin America. CEO Ryan McInerney released a statement loaded with incredibly specific tech strategy.
He really did.
He talked about enhancing the Visa as a service stack with agentic and stablecoin capabilities to strengthen their position as the leading hyperscaler of payments.
Lots of buzzwords there.
So many. I mean, I know what a stablecoin is and I know what a hyperscaler is. Usually we reserve that term for cloud giants like AWS or Azure. By integrating stablecoin rails, Visa is acting almost like a central bank for the crypto ecosystem. They don't care if a transaction uses fiat dollars or USDC as long as it crosses their toll bridge.
Exactly. They just want the volume.
Right. But I need you to decode this agentic capabilities piece.
Yeah.
Because that sounds like a fundamental shift in how a wallet operates.
It really is. So let's break down the mechanics of that shift. Agentic refers to artificial intelligence agents.
Okay.
But we aren't talking about generative AI that writes emails or chatbots that answer customer service queries.
Not ChatGPT.
No, not at all. An agentic AI is a system that has the authority to take autonomous action on your behalf to achieve a designated goal.
So in the context of a payment network, what does an autonomous AI actually do?
Well, it fundamentally changes the transaction routing. Let's say you make a cross-border purchase. Right now, that process is static, the card is swiped, and the transaction follows a predetermined rail. With agentic capabilities integrated into the Visa as a service stack, your digital wallet could employ an AI agent that dynamically negotiates the absolute best foreign exchange rate in real time.
Oh, wow.
Or, if a merchant accepts multiple forms of payment, the AI could instantly calculate whether it's cheaper for you to settle that transaction using fiat currency, a digitized reward token, or a stable coin, and then just execute the trade instantaneously in the background.
That is wild.
Yeah.
The wallet ceases to be a static storage container and becomes an active financial broker.
Exactly. And this ties directly back to your point about Visa calling themselves a hyperscaler.
Right, like AWS.
Right.
Right.
AWS provides the invisible compute power that the modern internet runs on. Most consumers don't know when they're using AWS, they just know the app works.
Yeah.
Visa is positioning itself to be the invisible trust and settlement layer for the next iteration of the economy. They don't mind if you use an alternative fintech app or a crypto wallet, as long as the underlying ledger resolving those agentic AI microtransactions is operated by Visa.
So this $1.5 billion Argentina deal is a proving ground.
Absolutely.
They are taking a high inflation market where alternative rails like crypto naturally thrive, and they are buying up the local incumbent infrastructure to test tokenization, biometrics, and intelligent risk tools at a massive scale.
Yeah, but this raises an important question, though.
What's that?
As they build out this frictionless, invisible future, how are they managing the very visible friction in their legacy business?
Oh, man. That brings us perfectly to the systemic vulnerability of this entire operation.
It really does.
Because the toll booth model is incredibly lucrative, but the clients paying the tolls are organizing a strike. Let's look at the legal friction because it is loud, it is ongoing, and it is phenomenally expensive.
Very expensive.
Earlier, we noted that total operating expenses were down 4% overall. But the filings reveal the only reason they were down is due to a massive 67% drop in the litigation provision compared to the prior year.
Right. They just didn't get hit as hard this specific quarter compared to last year.
Exactly. But they are still taking massive hits. Visa recorded a $311 million litigation provision this quarter, specifically for U.S. covered litigation, related to the multi-district litigation, or MDL.
Yet the MDL 1720 case, that has been a dark cloud over the payment network industry for nearly 2 decades.
2 decades?
Yeah. It is a massive class action antitrust lawsuit brought by merchants over interchange fees.
And Visa is actively bracing for the fallout. Over the last 6 months, Visa has deposited $625 million into their U.S. litigation escrow account.
Just locking it away.
Just lock it away. And the lawsuits just keep compounding. On April 21st, 2026, a new suit was filed, literally referred to as the potato-potato interchange litigation.
Yeah, that name is amazing.
Wait, hold on. It's actually called that, like the vegetables?
Yes, literally. That is the legal name of the filing from April 21st, 2026.
That's hilarious. But the implications are serious, right? These merchants are challenging the forward-looking release in the amended settlement agreement from that primary MDL case.
Right.
Basically, merchants are saying to the courts, we refuse to accept a settlement that bars us from suing Visa over fees in the future.
They want to keep the door open.
Exactly. And this isn't isolated to the U.S. In Europe, Visa is currently seeking permission from the U.K. Court of Appeal to challenge a competition appeal tribunal decision that ruled their interchange fees restrict competition.
And see, the UK ruling is particularly dangerous because it doesn't just ask for a financial penalty. It strikes at the legal justification for the fee structure itself.
Yeah. So what does this all mean, I had to ask? Is this $625 million in escrow a canary in the coal mine? I mean, if your core clients, the merchants who accept your cards, are in a perpetual, multi-continent state of legal warfare against your primary revenue mechanism, isn't that a fundamentally broken relationship? How long can Visa realistically out-earn a structural flaw like that before the toll booth model actually cracks?
Well, if we connect this to the bigger picture, we really have to look at the sheer velocity of their cash generation to understand why they tolerate this friction. Because yes, locking away $625 million for litigation sounds like an existential crisis for almost any other company on Earth.
Right. Most companies would fold.
Exactly. But let's look at what else they did with their cash this quarter. In the very same 3-month window that they set aside that massive legal defense fund, Visa authorized a staggering new $20.0 billion multi-year share repurchase program.
$20 billion in stock buybacks.
Yep. And they paid out an additional $1.28 billion in dividends.
Unbelievable.
So to answer your question about how long they can out-earn the structural flaw, right now the legal battles are a massive headache. But financially, they are simply absorbed as a highly manageable cost of doing business.
Because the volume is just so high.
Exactly. The volume of those 66 billion transactions generates a free cash flow hose that is so powerful they can fight a global antitrust war, buy AI infrastructure companies in Argentina for $1.5 billion in cash, and still return over $21 billion in value to their shareholders.
It is a scale of wealth generation that defies normal business logic. I mean, they are out-earning their legal liabilities by an order of magnitude.
Yeah.
But surely that isn't a permanent defense.
Oh, it isn't. The long-term threat isn't that a single class action settlement bankrupts Visa. The threat is a regulatory tipping point.
Right.
If appellate courts in the U.S. and the UK permanently restructure how interchange fees can be calculated and applied, the profit margins of that core toll booth will compress dramatically.
Which brings us full circle to why they are so aggressively pivoting their business model right now. If the transaction fees eventually get capped by regulators globally, Visa needs other revenue streams to maintain their valuation.
Precisely. And that is exactly why the 32% jump in consulting engagements is so vital. It's why they're spending $500 million to wire the Milano Cortina Olympics with biometric tech.
Yeah.
They're racing to diversify their revenue away from a pure reliance on the swipe fee.
It is an incredible paradox we are looking at today. You have a legacy financial titan that is absolutely thriving on the back of resilient consumer spending.
Yep.
They are actively transforming themselves from a basic payment pipe into a data consulting hyperscaler. They are buying up next-generation blockchain and AI architecture to defend against disruption. And they are doing all of this while fighting a perpetual multi-continent legal war over the very fees that fund their expansion.
It really is a masterclass in managing scale, complexity, and systemic risk.
Yeah.
And it highlights how deeply and visibly embedded they are in the underlying fabric of modern society.
Which brings us back to you, the listener.
Yeah.
Because it is easy to view corporate earnings reports as, abstract Wall Street noise.
Right, just numbers on a page.
Exactly. But every single time you swipe a card, tap your phone, or seamlessly check out online, you are actively participating in this ecosystem. You are one of those 66.1 billion transactions. Yeah. Your anonymized data is part of the advisory packages they're selling to global banks. Your localized payment habits dictate where they deploy their next $1 billion in infrastructure. In the digital economy, you aren't just a consumer. Your daily habits are the current that powers this massive grid.
We are the vital inputs in their data ecosystem.
We really are. Before we wrap up, I want to leave you with a final thought to mull over based on the CEO's vision. We spent time unpacking the idea of integrating agentic AI capabilities and stablecoins into the core network.
Yeah.
If Visa successfully builds out this architecture, where autonomous AI agents within our digital wallets are constantly negotiating our purchases, dynamically routing funds across global blockchains to save fractions of a cent, what happens to the physical payment card?
It's a great question.
Will the literal piece of plastic in your pocket even exist in a decade? Or will Visa successfully complete its transformation into an invisible, intelligent infrastructure, silently running the world's economy in the background, without us ever needing to swipe again?
It is a fascinating horizon to consider.
It really is. Thank you for joining us on this deep dive, and we'll catch you on the next one.